Hello traders, I hope you're all well and doing good on this Thursday morning. Welcome to the live advanced Bookmap webinar. Today we're joined by Scott Pulcini, a professional futures trader. We do this every Thursday at 10 a.m. Eastern Time. Bruce is away today, so my name's Sam. I'll be helping Scott this morning. The idea of these sessions is to give you an opportunity to peek over the shoulder of a professional trader as they use Bookmap. Scott has a huge amount of experience in the futures markets and will be taking us through some live analysis in just a moment. First, a few things to take care of before we dive in. You can find out more about Scott on his website, scottpulcinitrader.com. You can also connect with him on Twitter, Scott Pulcini TR1. Let me paste that in the advanced webinar channel for you on Discord. So, yeah, by the way, we're broadcasting on both Discord and YouTube today. To be honest, I recommend watching on YouTube. The quality is a little bit higher, and we don't have the room cap, the kind of capacity. I think we're capped at 50 or 100 on Discord. But feel free to post questions in either chat. I'll be monitoring both. Now for the disclosure. All Bookmap limited materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. And the risk disclosure: trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with a sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, that's the intros done. Scott, are you there, sir? I don't think he's... Oh,
You hear me?
yes, hello. How are you?
How you doing? Good.
Yep, so I'll over to you. Let me know if you need anything.
Okay. I need some winning trades. You got that in your bag?
I'm not sure I can help you with that. Pray to the trading gods, maybe, but...
All right. All right. Appreciate it. All right. Good morning, everyone. A little behind here. My thinker swim froze, and then I had to restart it and organize all my charts. So I'm scrambling as usual. It's been nothing but technology issues all week. My Monday and Tuesday, my internet there was like a scheduled shutdown. It was just a disaster. Missed some huge trades, but some of the members of my room caught them, so that made me feel a little better. All right, could you see my screen, Sam?
Yep, it looks good.
Sam Bueller.
Hello, you hear me? Yeah, I can see your screen.
Yeah, okay. The Bookmap screen, I'm talking?
Yep, no, you're good.
Okay, cool. All right, so currently watching ES here.
Russia's energy minister met with Iran's Audi in Moscow.
So there's a ton of sell ice coming in at the open. You can see down here. First it was this black zone, and you had 1200, another 600, and it's 18, another 1500, another 600. So you had almost 4,000 sell ice right here. It's not working out for them right now. And then you had in this, whatever color this zone is, gray, I think, you had another 700, and then you had little blips like close to 300 here. So this gray zone is another 1,000. So right now, where we're selling this is not feeling very comfortable, right? So we are So I trade these in one of two ways. I either trade these zones aggressively when they first break out. I'll go 80% of an ATR, or it's depending on the Ludwig levels, which we call lugs in my room. We'll go over that here shortly. If we are below the yellow directional line, then I wait for a full ATR, 5-minute ATR retest failure. Then I go long, and that's what I'm waiting for here. So this ATR right now is, you can see 5-minute ATR is 6.04. So 6.04. So 80% of an ATR is 4.83, so I round up, so it's 5 points. So I basically needed to see 6 points out of here, which we are now at, right? And a retest failure, and then I'll get in 5 points above this zone, so I'll get in at 50. So I'm hoping we retest. Again, this is the way I trade. We talk about this every week. You know, there's an art and a science to this. The science is there's no disputing that this is all sell ice here. How you trade these zones, once you understand the areas and applying whatever you're looking at, you can trade them any way you want, right? You can say I don't wait for a retest. I get in the minute it breaks out of the zone, or as soon as I hear the sell ice come in, I get in my trade right in the middle of the zone, whatever. This is the way I traded from watching this for 3 years and thousands of setups. This is the way I deemed the best way to trade these areas. But again, the areas are the areas. How you trade them is your prerogative. Once you understand what you're looking at. So, I'd say rough estimate 80% of the time, if not more, you will get a retest, especially for size like this, because this kind of size has the power to push the area. When they're wrong, they can't push it back into the area so they can get out of their trade. So, and all of these setups are all based on my personal experience as a large trader. And I used to do the same thing, right? I used to get smoked, and I'd be holding my breath, hoping it would come back. And then if I'd have any bullets left, I'd wait for an opening where I see there's no more buyers, and I'd start selling some more and see if I can get it running back into my bids that I had below, trying to get out of my original shorts. So that's what retest failure is. But it doesn't always retest. It has been struggling here, so I could see one of these. So hopefully this will hold the. Comes back there, then we'll get long. But at the time, the reason I didn't go aggressive long is because we were below this yellow lug, right? So these are Ludwig levels again. We've really incorporated them in our trading in my room, and I've really started to embrace these over the last year. Really, I wasn't using them in the right context for about 6 months. Again, I posted in here a few times. You guys have it for the newer members. Post the Ludwig webinar I had with Pamela Ludwig, where I ask her just basic questions on how she uses these, and it really helps you come up with a thesis for the market based on how they're reacting to the support resistance, and when you build new lugs, so on and so forth. So in this instance, we built new lugs here. We broke through the red. So red and blue are the most important as far, and she has these minor lugs too. We call them baby lugs in the room. But red and blue are the most important, right? So resistance and support. When you break them and build new ones, that's telling you something, and then you want to pay attention to how the market reacts to the new ones. So when you build new ones, you see here we have directional yellow, blue, and red. When you build new ones, you should hold, if this is a continue to be bullish, you should hold prior red and or directional yellow. And you can see it try to poke down overnight. Actually, I don't think this was overnight. Hold on. Yeah, this is overnight. It tried to go lower, tried to break below here, did a little bit, but now we're back above here. So this is telling me this is my target, right? And the great thing about these is once you're in a trade, based on your volume setups, you can sit there and hold them to these targets, right? You don't have to be algo to death, or worried, because it's going to happen, right? You get in a trade, and then you're going to have to go through this 99% of the time where it pulls back, blah blah blah, and you're not panicking out of the trade, because you understand these, you understand your volume areas, and you understand where this market should go, and then you sit here patiently and wait for the target, right? And these are also incredible when they're confluent with other things. So you can see this is basic market profile. This is a composite. A composite is all it is multiple days merged together, right? So just break this down here since nothing's really going on. So you can see when these are individual days, right, going back to end of February. So when the value area for the day, and the value area is just basically 60 or 70% of the trade for that day occurred in this value area, right? When that overlaps the prior, then you can merge the two and make a composite. And the more days that are merged into one, the more powerful the composite is. So this is a very powerful composite, right? So merge these back. So you can see these days just keep overlapping each other. Again, I know this is basic stuff for a lot of you, but it's good for the newer traders, and it's good to just go back over stuff like this. So how the market reacts to these is very important as well, right? So you can see yesterday, right? So I split out yesterday's trade. So all this is just the time period split out. If I merge it, it looks like a regular standard market profile, right? But a lot of times I like to see how the market react in certain areas. So you can see yesterday, we tried to get inside of this one, failed, and then launched, got back inside here, closed right here. So the tendency, or what you should expect when a market gets in a composite value area, is to travel to the other side, right? That happens probably over 80% as well. So as soon as you get inside here, you should be, and especially if you're getting volume signals and they're confluent with the lugs, you should be saying, okay, this is my ultimate target. Obviously the day closed yesterday, but you know, there were long signals here yesterday as well. You know, if you could have held it overnight, that's a little risky right now with everything that's going on. But the point is, it looks like we are going to tag this 4380 area, right? And then if we break out of there, actually I got to set up some more of these composites because I had to switch time zones on the time chain, daylight saving, and I lost all my composites. But let's see here. Let's merge these real quick just so we can see these important areas. So this is just a 2-day composite, but it's just good to have this up here. So if we break out of there, these are all individual days. So if we break out of this one, I fully expect we can make it up to here, the bottom of this at least, and then also the yellow or the red lug, which is at 4303. So the point is, if I'm able to get a pullback here, retest failure, I'm going to go long, and then I'm looking at those areas as my main targets, right? I'm looking at the red lug, and then, well, for the top of the top. So say I get long, right, on this retest failure, right? My first area where I'll look to get out of some is the top of this composite here. So it's right around 4378. If it gets through there, then I'll really watch this, and I'll get out of any remaining contracts at this, because these lugs are incredibly powerful as far as resistance and support, right? So I don't mess around at red lugs. If it gets up there, or blue lugs, if it gets up there, I'm out, and then I'll wait for new lugs to build, kind of like this, and I'll wait for a new volume signal, then I'll go back in long if that's the case, right? So that's my ultimate target right now, and I'll probably take off some at 4378 if I get that opportunity. So all I'm waiting for now is a retest of this zone and or something new to come in to potentially go long. So when I say retest failure, I need to see a retest. Again, this is the most recent failure. If this just goes like this and right through everything, I'm not going long, right? This is, again, how I've deemed to play these areas over watching thousands of them, that I want to see this and then a failure of the area, and then I go long. I don't just go long on a retest. Again, you can do whatever you want. If you want to if you say, hey, I don't want to wait for an 80% of an ATR out of here, I want to get long right here, or I want to get long right now, then you do whatever you want. It's your money, but I'm just telling you, one, if you're going to start to tweak.
NQ stop by NQ, 287 contracts.
If you're going to start to tweak the stuff, then you better know what you're doing.
Iceberg sell NQ, 150 contracts.
All right, so we got some good action here finally. So you can see here, 289 buy stops into 204 sell ice. We call this. This is one of my 6 setups. This is called a double whammy. So this is in my SI indicator course. You can get it in the Bookmap marketplace or on my website. But this is one of the main. This is actually a really powerful setup. So all this is stop runs are usually the retail trader puke, right? So that's not real buying. So it's really important to know when a market's moving up,
150
You
contracts.
see the sell ice is still coming in, by the way. When a market's moving up, you know, again, if you're just staring at a bar chart, you're like, yeah, look at this thing, man, it's going straight up. Look at all these buyers. You have no idea if you don't have this real-time volume information, whether it's real buying or if it's guys puking out positions. That's really, really important, because if it's just guys puking out positions, which it looks like all this is not real buying. This does not have the energy to continue up. It's just guys that puke. Yeah, they have to buy, but that's not initiated buying, and then it fails, right? And then on top of that, you get a stop run, and then you get some big money that has hidden iceberg orders in the order book that just triggered that they're willing to sell a ton up here. So those two things combined are very, very powerful to know. And if you're not using Bookmap and the CME MBO data, you have no idea this is transpiring. And again, you could be the best chartist on the planet. You do not have all the information. I don't care how good you are, you can be that much better if you understand what the real-time volume is doing, because the real-time volume drives the market. I don't know if you guys ever heard me say that before, or 40,000 times. Actually, I'm gonna make these. I usually make my double whammy zones dark blue. Hopefully the market will wait for me to do all this. All right, so that's that zone. Actually, I'm gonna probably have to expand that zone because this ice, you see this ice came in. Yeah, I am. All right, I'm gonna delete this. This was just barely 150 right at the open. So this is you always want to default to the most recent setup anyway. So you can see this sell ice came all the way to draw these zones. You click on your little crosshair and you just see where it started. So this started right around here. Here's that stop run, and the sell ice started coming in, and it came in all the way to here. So make sure you incorporate all the prices that happened in. All right. There's your zone. It's not too crazy of a zone, especially this volatility lately. So it's about 40 points. All right. So now how do I trade this? What's my next step? So now, one, I want to see what ATR is. The average true range is now 33.36. So that's 26.68. So we'll just say 27 points is 80% of an ATR. So then I see where we are in the lugs, Ludwig levels. I want to say Ludwig levels 45 times. So that's why I say lugs. So now we're above the yellow, right? So when we're above the yellow, I have to see in my setups, I need to see full ATR retest failure to go short because we're above the yellow, right? So meaning I need to see a full 33.5 points below here, a retest failure 80%, which would be 27 points, and then I'll go short. My stop goes 80% above there. If we were to hold this zone and move higher, I'll just get in aggressively 80% of ATR above this zone, right? So we're gonna let this play out and see what happens. What else do you notice here? Well, we came up here. Where do we just reject? This is a multi-day composite. Going back to end of February. Right. And what do we just do? Touched it, rejected. That's interesting, right? So if this can't accept back inside here, if it can't get in here, you're expecting to move to the other side, like we just talked about. If it fails, you're expecting a move back down to here, right? Or it could just hang out in between here all day too, but the expectation is it comes back and retests this. And this is yesterday's trade again. Looks kind of like a yes, right? We launched out of here, got back inside, couldn't tag the other side, got out and closed right here. So I'm just going to make this normal looking now. So that was yesterday, and now we're struggling to get inside here. So if this turned, and here's our volume signal, right? So if I get full ATR retest failure, this is the double whammy I just drew on the Bookmap chart, then I will short this. If this can hold here and then get inside here, 80% of an ATR above, I'll get in, and then here's my expectation, that, and we'll red lug first, because that's at 14.068, and then 14.2 is the top of this. Both of those areas I'll be looking to get out. I mean, I'll probably get out of all of them at, like I said, at the red lug. But if it just rips through there, I might hold one and see if we can get up to 14.2. So we'll see. That's a lot to happen, but let's see if that can. We are currently moving lower. Let's see if we're getting a retest of that ES zone. Not yet. So there's a potential here. I'm going to go long ES and short NASDAQ, which I hate doing, but again, I trade these markets individually. Okay, so again, we need to see, first and foremost, I need to see 33 down to 32. And you want to keep an eye on this. This is dynamic too, right? So even when you put your stops in, if this starts changing, you can trail your stop based on the ATR. So 3270 is now the ATR. So basically 33 points out of here, I needed to see. That did not get 33 points out of here. This only went down to about 24-ish. 24 and a half. Or was that 33 points? Let's see, the bottom of the zone was 50. No, so that was, we need to see 17 for a full ATR. Right, so I need, for myself, I need to see the zone to hold down to 17, retest failure. You will be amazed how often this exact thing happens. It happens all day, every day, in all markets. Here's another example here too you want to be careful of, right? So a lot of times when people get the Bookmap and they get it for the first time and they see these spikes in the icebergs, they're like, yeah, there's some ice, I'm going to get in. This ice is meaningless. And what I look at, I have certain thresholds. Again, this is in my course as well. I have certain thresholds for each product that is either is tradable or not tradable. This is only 57. This is only 56. These are not market moving values that you can trade off of, or that I trade off of. And this is where guys get in trouble. They see these little spikes that, they spread out their chart and they're like, oh, look at this big ice, I'm getting in. It means it has not, this is not market moving information, right? So we look for spikes like this. So my threshold in NQ in my course, I think I have 120 or 100. I've sensed up to 150. I like it even better when it's over 200. And again, you can see the sell ice was almost 300 and the buy stops were almost 300. So this is a legitimate zone and you should get some really good movement out of here one way or another. So that's that. We're waiting for a retest there. Any questions, Sam, on that stuff? While we're just sitting here waiting for something to happen.
Yeah, we've got a few questions. Over on YouTube, Alex is asking, do you have any volume-based insight to assess whether the session will be sideways or trending?
Volume-based? Not really. I mean, a lot of times what I'll look at is one, where the liquidity is, right? So you want to, in the Bookmap, so this, we've seen this before. So this is potentially, this is interesting, right? So you should be doing this every day. So let's start at the beginning and then we'll go back to the range stuff, right? So every day you should be looking at your market from a contextual viewpoint, bigger picture viewpoint, right? So what do you see here, or what should you see here, right? We do this every day in my room before the open. I go through all the markets that we trade, and go over what the potential scenario is, because you want to have some kind of why is my, hold on. Okay, there you go. You want to have some kind of context and come up with a thesis. It doesn't mean your thesis is always going to be right, but when you get it going your way, then you can expect bigger moves based on the stuff that you see here, right? So what do you see here? Well, I see we had a balance area. Balance area is just two-sided trade, basically traders placing bets. Whoever in here was wrong, they got a puke. Then what do? We build or balance. Balance is just back and forth trade, right? So you had that. So now what are we doing now? So yesterday after the Fed, FOMC, we broke out. What do we retest? The top of this. So when markets break out of balance many times, it'll come back, it'll retest the top, then go, or it could even retest the bottom, or the, I'm sorry, not the bottom, the high volume node. We call this high volume node. High volume node is just the area in a balance area where the most trade occurred, right? So, and it's just a rough area. It's not an exact price point. So it can retest the high volume node and go. So this market is still short-term bullish based on the breakout of this balance area. But where do you see that it is about to get above here, but we're kind of struggling at the prior high volume node here, right? And that's where we're at right now. So if we can move a little higher, this will be a fail. So it'll be a breakout of this balance area, which is the most current, and it'll be a fail breakdown of this guy, where it tried to break down, couldn't, and it gets back to the high volume node. Those are one of my favorite trades, and this is a playbook everyone should have when you have breakout of current balance through the high volume node of prior balance, those are incredible trades. So if this just starts motoring out, this is coming up to the most recent, or this balance over here, right? So then you want to watch areas where the prior balance was forming bottoms or high volume nodes.
10:30 a.m. Eastern Time, we do have the USCI natural gas change BCF forecast minus 74 billion, previous minus 124 billion.
So my point is, if we get out of here, we're definitely we should get up here, back up to this prior balance. So that's what we should do many times in trading. If something doesn't happen that should happen, that's telling you something is wrong. So here's a perfect example right here, right? So here was a smaller balance. What did you have this day? Tried to break down, failed breakdown, right? This looks like it should do that, kind of like I'm saying it's doing right here with this bigger one, right? Based on this and this, right? Well, that's what should happen in market context. If you have a balance area that breaks down and it gets back to the high volume node, this thing should rip. Well, what did it do? Not so much. It sat there and built more balance right here and then died, right? So again, on this day, I was expecting this to do this once we got to the high volume node, kind of like right now. If we get through this high volume node, I'm expecting this to happen. If it doesn't happen, that's incredible information going the other way once it starts to motor the other way, right? Or when you start getting your volume signals the other way. So right now I'm expecting that. But if for some reason we do this and then we build balance for the next day or two and then it breaks down, well, that's a really great sign that something like this is going to happen, because it should have done this based on what we just went over, right? So you want to know your context for the day, right? And then you also want to know, back to the range trade, whether it's going to be a breakout day or a trending day or range day. Well, it depends on where you're at. So this could easily become a range day because we're still struggling to bust out through this high volume node, right? So this could easily just hang here and do this. So you could expect a range day if this can't go any higher, right? And it'll probably do this. If not, come back down here. So another important thing you want to note here is there's 4 important areas of charting, right? When you're looking at this type of information, it's the tops and bottoms. And in my new course that's coming out, my new SI indicator course, I'm going to actually include a webinar I did on this stuff of drawing. This is what these zones are. I haven't drawn any new ones lately, but that's what this stuff is. And you really want to know these areas. But tops and bottoms of balance areas, high volume nodes of balance areas, directional conviction, where directional conviction starts is really important, and buying and selling tails. That's a buying tail. That means it was instant rejection, right? So everything right now, if this can get a little higher, is saying we should do that. We had this, we broke out of this guy, we tried to have a fail breakout, put in a major buying tail, and now we're up here about to get through this high volume. Everything is showing me that this will do this, which will turn into a trend day if this moves a little higher. If it can't, then we're probably going to get a range day. So that's number one, just understanding the context of the market. Then you look at your real-time volume. Well, where's all the volume? Well, it looks pretty mixed to me, right? I mean, you see, this looks heavier down here, but you have liquidity up here. So this could definitely turn into one of these types of days where these guys get filled and these guys get filled, right? And trust me, these guys will get filled eventually because they make themselves get filled because they have the size to push the market where they want it to go. Again, I know that because I used to do the same thing. So when you have enough contracts, when the timing's right, you can start pushing the market in to your areas, right? And they start testing the areas. So what this looks like to me is all this sell ice that was right here and right here. This is probably their bids below. So they thought they can stop this market and push it back down, and then the market would come back. So they sold all these contracts secretly, hidden, well, not secretly, but they're hidden, and they're really hidden for people that don't have Bookmap. And then they probably want to get their bid filled. That's the game, guys. I'm telling you, it's nothing but a game, and you can either get mad about it. We talk about this every week too. Trust me, I was in that boat for a long time. I had serious PTSD from being a multi-million-dollar trader and getting knocked out of the game basically because of the algos and the games and everything else. And I'd sit in front of a screen and just curse at the screen all day. I mean, I still do that, but at least I know what's going on. Not understanding what was happening as far as the algos, blah, 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 right? If you understand the game, again, if you can't beat them, join them. If you know what's going on, this is exactly what this looks like this was, right? Again, you're never going to know, and that's the other thing with people that are just naysayers. They don't believe anything about trading, and I don't blame them because there's so many shysters out there that, you know, oh, here's my system that's 89% over blah blah blah. Trust me, I understand why there's a lot of scars in this industry, right? But this is the stuff that
79 billion minus 79 billion, that's a draw on the
I don't know.
forecast minus 74
Oh, that's the
billion.
natural gas number. Lost my train of thought. But anyway, you know, if you understand this stuff and understand the game, then you can join that game, right? So that's the whole point to this. And again, if you don't think that's what's going on in here, then you don't really know what's going on. Because trust me, that's what's going on. Again, none of this stuff is hypothetical. My setups are not hypothetical. Everything I'm talking about is from 23, 24 years of trading experience and being, you know, a trader that could at one point put on 3,000 contracts at a time, E-mini S&P contracts at a time. So I'm not saying that to brag, obviously, because now I'm trading 3 lots, right? My point is that, and that should also be very refreshing for you guys to see someone, you know, so many traders back in my day were, you know, these, you know, big traders or relatively big traders. Everybody got knocked out of the game because of the algos, right? And not many people came back, right? So the reason I came back is because of the Bookmap, and that should be very refreshing for all you. Where it's not like you're watching me and being like, well, yeah, that's great, but Scott's some big trader, and I'm never gonna, I can't do that, blah blah blah. Guys, I got knocked out of the game and had to start basically at zero again, trading tiny. I'm still trading tiny from my account size, but you know, that should be refreshing that you can do it as well, is my point. So that was my first rant of the day. That wasn't really a rant, that was inspiring. All right, still waiting for a retest of this and waiting for this to get below here. 33 points, which we did. Now this is an official full ATR below here, right? So now if I get retest failure, I will go short. So that's NASDAQ. Again, I may have dueling positions on here, but I'm hoping no. So even though these guys came in, this is what I was saying too. You know, what I was saying, the hypothetical stuff here, right? Like, hey, here's guys that were shorting at the open. This is probably their bids below. They're trying to get filled and then have it move down and get all their fills on their bids. You know, you're never going to know what the intentions are of big traders ever, right? You can, and that's what I was trying to say when I lost my train of thought. That a lot of people are like, well, you don't know. That could be hedging. That could be them exiting positions. That, you know, I'm talking about icebergs and stuff like that, or even liquidity. It doesn't matter, guys. It's the area.
500 contracts.
Right, there's some big stuff going in bonds. Maybe we'll do a rare bond trade today. The area is what is important, because somebody's selling a ton and somebody bought a ton, right? And when it moves out of this area, it's going to rip. And I mean, you know, gets more than an ATR out of here. You're going to get a puke, right? Just like we were talking about the balance areas. That's what trading is. It's guys placing bets, guys and girls placing bets, firms placing bets. And when they're wrong, they've got a puke. When they're wrong, they've got a puke. Markets are in 2 states at all times. They're either balancing or directional. Balancing, directional. Balancing, directional, right? So that's all it is, and it's at all time frames. The bigger the time frame, the more powerful it is. But you can see it's the same stuff here. What do you see? I see, if I was looking just for short-term, really short-term trading, I see a balance overnight. I see a attempted breakdown. Then I see more balance. Does this look familiar? Does this chart look, this is a 5-minute, right? But what do? We broke out of this balance through the high volume node of that balance. What does it, now tell me if this looks like this. It doesn't matter the time frame. Here's your balance. Here's your balance. Breaking out, trying to get to the high volume node, right? That's what we just talked about. It's all time frames. So you can even trade it on this. Again, the daily or the hourly and daily. If you break it down to a daily, it's even more powerful. But it just helps you understand what do you think this is? These are traders. Again, this is overnight stuff. That's why it's shaded. These are traders placing bets. These are traders placing bets. Whoever's wrong, and the shorts were wrong here, they got to puke it out. So you, once again, even in this context, you expect this. If this thing doesn't do this and it comes back and fails, then we're going to get that. And then you add in your real-time volume, and then you have yourself a detailed plan with an incredible edge. And that's what trading is. And then you take your trades. All right. So anyway, for the range stuff, you want to know the bigger picture. That was a very long explanation for that. You want to know the bigger picture and say, okay, are we breaking out? If you're breaking out of a big balance, you don't expect a range day, right? And then you also want to take a look at your liquidity. Where's liquidity? Is it on all one side? Let's look at NASDAQ and see where liquidity is in here. NASDAQ there's a little bit below and there's a little bit above. Nothing crazy. But some days you'll see, and you've seen these on these webinars, we'll look at a market like NASDAQ and it'll be just liquidity, 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 and then below is a black hole. That's where we're going, right? If you see liquidity on both sides some days, then you can maybe expect a range trade. All right, next question. Sorry, that was a very long answer for that question.
No, that was great. Inspiring stuff. Yeah, I enjoyed it anyway. Yeah, we've got plenty of questions. I kind of want to be selfish and ask my own question, to be honest. Yeah, I want you to kind of. Well, first of all, let's just ask the chat. I know we've got like a wide range of experience of traders here. Like, how many years has everyone been trading? I know we've got like complete beginners, and I know we've probably got some veterans in here. So, if you could just type in the chat how many years you've been trading for. And what I wanted to ask you, Scott, kind of rewinding back to your early days of trading, is there anything you can share, any early lessons that kind of helped you achieve success? I mean, I imagine it wasn't like one particular aha moment. I imagine it's a case of just happens over time, but perhaps you could give us some insight there.
Actually, it was an aha moment. It was. I mean, again, most people know my story. I've told it so many times. It's in the book, Enhancing Trader Performance. Dr. Brett covers that in there as well. But I mean, I started out trading. Again, this should be inspiring to everybody. Even when I was $1 million trader, I started out my first 2 months at my trading firm. I had to beg my friend to get me an interview with the guy that ran the firm, and then basically beg him to hire me. And then I sit down, and back then there was no education. It was literally stare at a dome, and then you had some charts. I didn't even really understand. I mean, I understood charts, but I didn't understand charts, right? I mean, I knew what bar charts were, but I didn't, or candlestick charts, but I didn't understand, like I understand now. Obviously, that stuff comes with experience, but back then it was just stare at the order book and try to figure it out. I mean, that literally there was no training, there was nothing. It was sit in front of your screen and figure it out. What I did know is there was a lot of guys in that firm that were making very good money. I'm talking, $3,000 to $5,000 a day, just basically just throwing orders in the order book. It was so ridiculous back then. Again, this was right when the trade went to the screens. I worked at the Board of Trade. I was an ARB clerk at the Board of Trade for 4 years. And talk about stress. That's real stress, right? When you're in the trading pit. I was in the bond pit. Guys screaming at you, and you're working. I was an ARB clerk, doing the hands, like you guys know trading places when they're flashing their hand signals. When you're working for a broker and you see something wrong, like a big house, right? The big money, the funds or whatever, they fire an order into you with their hand signals. If you make a mistake, you can blow your broker out. You can literally end his career, right? I mean, you can cost him a couple $100,000, $1 million in a heartbeat. So that's where I started. So then, at that time, this was like 2001, 2001. Yeah, because it was right on 9/11. The stuff started going to the screen, and my buddy started working at the firm King's Tree Trading, and I begged him to give me a job. So I got a job, sat down, lost every single day for my first 2 months. Every day. My very first day, this story is still ridiculous. My very first day, because like I said, they just throw you in front of the computer. So I'm like, okay, all I can trade, I'm pretty sure it was ones or twos, right? And that's what I started with. Again, that's why it should be inspiring for you guys. Trading one lot, my very first day. And I wasn't holding trades either. I was like getting in and out. So I was basically just messing around, trying to figure out what all this was. I lost $2,500 my first day on one lot. That is very, very, very difficult to do. And that is very, very bad, right? So first day, I basically almost got fired the first day. Literally, the owner of the firm told me at the time, like when I finally started to take off, that he was about to come in there and pull me off the screen the very first day. So that was my start, and then I went literally 2 months. So if my friend hadn't got me the job, I would have been fired way before that. So then I went away and I we went on a fishing trip up to Wisconsin, and just to get away from markets, because I was getting pummeled. Like, this was my chance, right? And I was blowing it, and I was broke and didn't have a dollar to my name, and it was like, talk about stress trading, right? So we go on this fishing trip. My buddy gives me this book, Reminiscences of a Stock Operator. We've talked at length about that in these webinars as well. I read that book, and things started to clear up a little bit for me. It's an incredible book. To this day, read it. Once you start reading it, you're like, oh my God, like the mistakes he talks about. This is over 100 years ago, and it applies to today's traders today as well. So I came back from there, from the fishing trip. Then 9/11 happened, and the markets closed down for a week, the U.S. markets, and I started trading the German DAX overnight to try to figure out. Nothing's going on, by the way. We can't even get a retest of any of the zones. That's why I'm telling you stories. So I started trading the German DAX just to figure out what I was doing. And I started seeing stuff in there as far as the order flow and like the games the guys were playing with the size and pulling it. Back then, spoofing was completely legal, right? And this was Eurex on top of it. This wasn't even the U.S. markets. So then when the markets opened back up, I started to figure out the games, just like I'm showing you guys here. It's always been games. It always will be games. I started to figure out the games that these guys were playing, the big money when I saw big orders in the order book. And one day it just clicked, like the light went on, and I started to make money. And then all of a sudden it was like I was making $1,000. And again, I'm trading ones and twos, right? At the most. I don't even think I had twos most of the time. I was starting to make $1,000 every day. And then again, it just clicked. And then I went into the owner's office, and I made him a bet. Mind you, I was only trading ones and twos at the time when I made this bet. I bet him that this was going into 2002. It was like December of 2001. I was so sure I had figured it out. I made him a bet. It was just like a golfing trip bet, but I bet him that I would be the number one trader the following year. And that year, the 2001 year, the guy, he was at my firm, his name was the Big Cheese. He had made like $2 million that year. So here's me, who had lost every day for 2 months. I just started making money trading one last. I was up like maybe $8,000 or something when all was said and done. And I went in there and bet him I was going to make over in my mind, I had to make $2 million for 2002. And then I did it. So that again, it does click, and this is what I'm saying. If you guys can start to understand these areas, how the market reacts to them, understand the games with the liquidity, use your Ludwig levels for your targets and stuff like that. If you guys can understand that stuff, the light's going to go on, right? So that's the inspiring story that I can give you guys. But most inspiring out of that story is I started out trading tiny like you guys. It wasn't like I had some big account and I got lucky. I had to literally build my way up, right? And then again, the other inspiring story is, I got knocked out of the game when the algos took over, low volatility, 2007. I bounced around from a couple firms and then tried to trade on my own, and for like 6-7 years, and I had to leave the business in 2013 for like 4 years because I could not I was at best a mediocre trader, at best. I wasn't even that. I couldn't support my family, so I had to go into medical sales for 4 years. And then Dr. Brett, who wrote the book Enhancing Trader Performance, called me and said, hey, you want to check out this software Bookmap? It's pretty incredible. It shows the market in a whole different way, kind of, because he sat behind me for a year when he wrote his book to see what made me click, or tick, I should say. And he's like, you want to check this software? And this is way before any of this stuff, right? This is, when I saw this, I'm like, I'm back. And that was even before the SI indicator, right? This is just looking at it in this dynamic. So then, the rest is history. And then I got back in it, and, this is what I'm going to basically do for the rest of my life now. It's not going to happen again. I learned a lot of lessons as far as, and this is what I tell my room every day, guys, and in these webinars. Learn from what I'm telling you, especially not just the good trades, right? I'm talking like when I make mistakes, or when I tell you don't do this, or like my rant last week. Watch the Bookmap video from last week. I talk all about like risk control and stopping yourself for the day, all that stuff. If you're not listening to that and taking, and this is a retest of the zone, by the way, hold on one second. If you're not listening to that, and you see how we came right here, came within one tick, that's a retest. I'll come back to my rant one second. ATR is 6.85. So that is 5.5 points out of here. I will go long. So that is, the top of the zone was at 45, so 50-50. Hey, we might put on a trade today. It's kind of cool. All right, hold on one second here. My auto trader didn't do. So what I was saying is, learn, you don't need to go through 20 years and getting blown out of the game and coming back and all the mental anguish. Apply what I'm telling you as far as the risk and how much the size you should be putting on and the correct size, like with the risk calculator and stuff like this, right? This is all available in my room, this stuff too. Learn from my mistakes and you don't need to go through 20 years of pain is what I'm saying. All right, so I got filled on that. So now ATR is, what did I say it was? 5.5 points. So this was the most current zone that I'm trading off of, right? This whole area was sell ice. Remember we talked about this bigger sell ice, but then this came in. So if this was by itself, it would go 5.5 points below here, right? Which I'm just gonna put this in for now. That would put me basically at 45.30, right? Now I want to eyeball, see what the problem with this stop in this situation. This doesn't happen that often, but I'm right in the middle of that zone. So what I'm going to do is I'm going to move this just a little bit lower. It's a full ATR almost, but I'm going to move it because I don't want to get stopped out in the middle of that zone. You got to show me you can come down. The thing that's making me nervous about this trade is all this liquidity down here. But I play my zones like I play my zones. I don't say, well, there's liquidity, I'm not going to go long here, because this liquidity does not need to be filled right now. You see what I'm saying? So this could like rip higher, come up here, and then eventually by the day go fill this, right? So it doesn't mean it's going to happen right now, of course. And you guys have seen this 1,000 times. Filled to the exact tick. Just so special. It makes me so happy. It's just all I do is complain about this in my room all day long. Look at that. It's like every single time. How is that the exact tick? And the thing is, that's why I went to 80% ATR. I used to have it at 75, then I moved it to 80, and it's still the top tick, but it is what it is. All right, so that's my stop. What I'm hoping is we can go retest the zone in NASDAQ so I can go short, or at least have some kind of hedge on. So, let's see here. That is just absolutely hysterical in a bad way. Exact tick filled. All right. So anyway, let me put this stop in. I'm sure I got filled at my auto trader. All right. Put too many on there. I think I have too many. I definitely have too many on here. So because oh, goodness gracious. Here we go.
592 contracts.
I mean, that is absolutely sickening. So, fill the tick, didn't get the retest of this NASDAQ zone I wanted to shorten, and looks like I'm going to take it on the chin on this one.
Contract contract.
Right. That was not very pleasant. I guess the market didn't like my stories. Right, so you can see there was a swipe there, but this was not a stop run or anything else. This was just a big trader that just puked. He probably got long where I got long and then just puked them all out. Right, so this is not looking very promising. And again, it's unbelievable that I get filled. Yes, you guys have seen this so many times. Look at that. I mean, that's literally like the exact price. And I guess I went a little bit higher, but still annoying. All right, so now we're gonna have to endure this. Let's see what happens here. Again, I was waiting. I was really hoping that we pop up and I can at least get a retest of this zone to go short NASDAQ, which we still could, but I was hoping right there that would have been in the retest, but that did not happen. So, all right, so that's on. Well, let's take a look at bonds, by the way, because this thing's been firing off this whole time. That's my one pet peeve that sets me off, if you guys didn't notice, is the exact price fills that happen nonstop, literally 10 times a day. All right, this is really important. We'll be trading some bonds today, it looks like. So look at this, 1600 sell ice in here, 1700 sell ice. I try to make the sell ice black just so you guys can see what it was. So that's step one. I don't think we've ever traded bonds on this webinar. We're about to. Remember, bonds are 3 times normal tick size too, so. All right, so that's number one. Number two, the ATR in here is 14.9, 5-minute ATR. Where's the market at here? All right, so you can see right there where it says ATR, Wilder's 14.9. I'll check the lugs. See all my college basketball stuff, very important. Here we go. So we're above the yellow lug, right? So that means I will enter long aggressively, 80% of an ATR. Short, I have to wait for full ATR retest failure.
Soybean ice iceberg size ES, 151 contracts.
Look at soybeans too. I missed a trade there this morning.
Soybean ice iceberg size ES, 151 contracts.
All right, so 14 points is the ATR. So 11.2 is 80%. So 12 ticks, I will go long aggressively in here. Remember, it's 3 times the size, so I'm only going to trade at 2 lots. So this happened at 11, so at 23, I will go long. And if I get filled on that, then my stop goes 80% below this zone. That's that. Really annoying. Is this a new signal too, by the way? Did I miss this? No. It's only 100. Why does it look so large on here? Well, that's 400. That's still not threshold for me, but. Sell ice might be a winner here today. Again, I'm sure this is them below. I was hoping we can get one rip up and then come back down here, but. All right, so let's check out soybeans.
Forces. That says that more US forces are on call.
Are we getting headlines? Is that what that was? That'd be shocking. I can't tell you how much money the headlines have cost me over the last 3 weeks. And what I tell my room, it's like, you either don't trade right now or you gotta accept it, right? The way that traded with that swipe and bonds were flaring off too, I think it was a headline, but we'll find out like 20 minutes from now when the market drops 50 points, then we'll find out what the headline was. And what is this? I definitely put on too many contracts. So let's go back to this real quick. So if I was risking from 50.5 down to 25, so that's 25 points of risk. I have way too many. I have double on that should have on, right? So then you go to your little, you go to the risk calculator. Yeah, see, 25 points I have too many on. But what I'm gonna do here, and I should have known this away, but I was chirping, so I just got out of 2 there. Take my beating. This is not looking very promising, but at least I won't carry, my stop's another 10 points away, so at least I'll get out of that. But it looks like this is exactly where we're going. Right. All right, so that's that. Just hoping we can get one more pop and I can at least short this NASDAQ, because then that'll be a nice little hedge on this ES trade. One second here. All right, let's see what's going on in soybeans. All right, so this is drawable. So I'll show you the trade that I missed earlier, but we're coming back here now, which makes me feel a little better. So you see this buy ice here. This is 150. I like to usually go closer to 200 in beans, but you had 150 and then another 70 here, basically in the same area. So that's over 200. There's your zone.
US Defense Secretary Austin says the Ukraine no-fly zone means you are in a conflict with Russia.
Yeah, here we go. Throw some more headlines out there. All right. That's a pretty tight zone too. So that's 200. So you can see this is where it spiked. Actually, did I get all the prices there? This is where it spiked. Yeah, I got them all in there. Came down to there. So for soybeans, step one, let's check out the lugs. Above the yellow lug, you can see here, once again, market profile. So if I was long, I'm going to show you where I should have gotten long earlier. I would have got out of some here, like we were talking about the other markets, where I'll get out at the top of the market profile. So
Bondice iceberg size EB, 500 contracts.
So that's where it failed, and now we're back to the bottom of this. So, but we're above the yellow lug. ATR is 2.5, which is actually pretty tight. It's good. See right there, 2.5. Oops. I'm gonna do that. So to go long, I'll go long on 80% of an ATR, 2.58, 2.06. I round up, so 2.25 points out of here. I will go long. So it's 72.50. And I'll go back and make sure my size is correct on this one, unlike the ES. And then, so if I'm going to go short, then I need to see a full ATR retest failure because we're above the yellow lug, right? Otherwise, I will go long that right there. So 2.25 point there to fill, 2.25 point below here. That's 4.5 points, and then the zone is another 70.5 to 69. So that's basically 6 points of risk. So in this trade, I can put on more, right? So you go to the risk calculator. It's the same values as ES, so you can just do ES. So this is based on this account size, risking 1.5%. Remember, you should never be risking more than 1.5%, 2%. If I'm risking 6 points, I could put on 7, right? And you can use this for micros as well. If your account's 13,000, you don't have to change anything, right? If you just trade the same amount in micros because it's a tenth of the size, right? So you don't have to, you just pretend like this is 13,000, and then you could put on, well, you can't trade micros and beans, but you know what I'm saying. So this can actually be a 7 lot based on my risk parameters. So there you go. That's that. All right, I thought I just heard something here. Right, so this is a new setup here, right? So you had the sell ice there, and then you had some buy ice come in, and this is 450 and another 400. So I'm going to delete this for right now and trade off the new zone because it's the newest volume event. So that sucks because now I have to move an ATR, 80% of an ATR above this zone, but it is what it is because that's how I trade. I don't ignore new zone, meaning, remember I was just going to get in basically right here because I was trading off of this volume event, right? This is more than this, but this is still 1,000 or more in this area. So now I'll wait for 80% of an ATR above there. So ATR again is, no, it's 15.8. So 13 ticks out of here. So now what I want to make sure though is I'm not buying right into the red lug, because if that's the case, then I will wait. Yeah, so see this? So I will not go long this right now until we can bust through here and build new lugs, right? That's when I will, because I'm not going to buy, I'd be buying right into the red lug. I just told you how powerful the red and blue lugs are, right? So I need to see new lugs there. So that long is put on hold right now. I should have been looking at that before because I almost bought into the lug anyway off of this first setup. So we'll just wait on that and see. Wait for the newest headline to come out. All right, I'm just really hoping. I think it may happen. where this NASDAQ can retest and then fail, and then I'll at least be short NASDAQ when this thing dies. You can see where we're struggling, right? We talked about this before. You look at NASDAQ too. I didn't show you guys NASDAQ. This thing is struggling to get through this prior balance high volume node. Right? It's close. Now we're kind of building balance. So it needs to do that. If not, we're coming back to this guy. We're probably going to come back to the high volume node too. Well, the other thing that I've been looking at too lately, let's check out the Hero spot gamma. Talked about last week, this is not a red light, green light, but you want to pay attention to it and help you understand where the options activity is pointing the market potentially. So I'm going to look at, you can see all these individual stocks, but I'm going to look at SPX. All right, that doesn't look too bad on the long side. You can see here though, look at this divergence here. This was holding down here, and then the market came to this, and now this is starting to turn up. So it's basically right in here. Again, this thing could diverge for hours, and then it'll eventually go. That's why it's not red light, green light, but you just want to pay attention to this one. You can put this in context with everything else that your thesis that we've been talking about for the last hour. Then you know, it just gives you more confidence in your trade or to hold your trade and so on and so forth. All right, so you can see ES held its daily value area for now. I'm not very confident in this trade, but we'll see. Daily value area is one standard deviation from VWAP. Right, it held there. This needs to get back above the yellow. If not, I'll get stopped out, but any short signals I'll be looking to fire away. And then if we get out of this thing, so if I do get short, I'm definitely going to watch this area here. Actually, I think that's right where my stop is. No, I'm sorry. That's 43.07. So if I do get short, I'll be watching around 43.07 to get out of some. And if we get out of this, we get out of this guy, then we're coming down back to this guy. Then you want to see if it accepts in here, and then that. But hopefully it can hold and move higher. All right, any questions, Sam? Is there a question, why do you always get filled with a tick?
No, good rants. I think that I mean, you can learn from that in itself. It's you know, you got caught offside and your reaction was, okay, I'm going to take it on the chin. You know, you don't move your stop or anything. You stick to your process. So I think that's a lesson right there. And I think that's
yeah. I mean, I do complain a lot. Like, I don't complain a lot about losers, but that right there, that drives me crazy because I just cannot understand for the life of me how I'm the exact price point 10 times a day. Like, it's quite shocking. That's my weakness, my pet peeve, that I kind of lose my composure. Other than that, I mean, listen, guys, if you don't understand trading, if you don't understand, it's just a percentage game, right? I know what I'm looking at. I have the ultimate edge in the marketplace, right? It doesn't mean it works every single time. We've looked at this last week, and you look at my stats, right? This is from basically beginning of the year, right? You look at this stuff. Trading twos and four lots, right? So this isn't a ton of money, but it's, that's a good return in a couple months, 3 months, trading four lots or two lots. But what I'm trying to get at here is, and this is counting commission as well, but let me see my winning percentage, which is, I always try to get a better winning percentage because it just shows you can be under a 50% trader, right? And be profitable. So the point is, you're going to take some losses. So I know already half of my trades are going to be wrong, more than half, right? So, but I'm fine with it because when I'm right, then I kill it. So if you can adapt that mindset, you're on your way to becoming a professional trader or someone who can trade for a living. If you can't accept losses or think that you're going to be 80%, 90%, you're in the wrong business, and it's not going to happen. I'm just very blunt with my room and everybody else. Like, if you think you're going to be 80% trader, you may be scalping around in though, even if you're scalping around, I don't care. Even if you're 70, 80% scalping, which again, I want to see your full-time stats. If you claim you're 80%, I had someone in my room the other day claim they're an 80% scalper. I want to see your stats for the last 6 months to a year, and then you show me that you're 80%, then I really want to shake your hand, right? Especially if you're doing it by hand and you don't have algos, right? But even if you are 80% and you're scalping, you're in and out all day, you're still paying $4 not even $4 a round turn. You're not going to make it. I'm telling you, you're not going to make it. You're going to grind your account down to a nub. You may do well, and then you're going to catch a day where you get just run over, trying to scalp stuff. So you take your losses plus you're grinding your account down with commissions. It's like that. Guys, if scalping was an option, if it was a viable option, don't you think I'd be doing it? I was one of the biggest scalpers on the planet at one time. That's where I made millions of dollars. So if it was possible, I would be doing it, right? Again, I may be missing something. You may be a superstar scalper. Show me your statements for 6 months to a year that you're 80%. Then I'll believe it. Other than that, I don't believe it unless you know how to write programs, and I still don't believe it. But and the other thing I was complaining about last week, we talked about this. So this is, you guys, so go to my website. There's a bunch of discounts for everything on my website, including this TraderSync. You need to have this. Again, I used to use TraderView. This thing makes TraderView look like it's from 1942, right? As far as what it tells you. I mean, TraderView tells you the time of day, but this is just really detailed stuff. Anyway, look at my P&L when I trade from 10 o'clock Central to noon Central. Right here. So it's 9:11 my time. Look at that. If I just didn't trade at that time of day, and like I was telling you guys last week, I already know this. I used to leave my trading firm between these hours because I lost so much money. So once again, look at this P&L. So you saw the P&L was like plus 33 grand. Look what I've lost in these 2 hours, because this is when the algos take over, right? So all you're asking for a whipsaw to death when it gets to this time. 42,000 at the 9 o'clock or 10 o'clock Central, 11 o'clock Central. So it's 72,000 in P&L that I've thrown away because, and the thing is, I know better, right? It's not like I'm like, wow, I didn't realize that's not a good time to trade. I already know that, right? So that's pretty pathetic, but it's good for you guys. Again, my mistakes you can learn from. You can say, wow, if he gets killed at that time of day, I may really want to not consider not trading at that time of day or really cut down my size, right? Well, again, my pummeling is your benefit. What I was going to show you something else too. Oh, the other thing we want to keep an eye on is the relative volume. Talked about this last week too. When this thing starts to die down, look at this. This is why it's a chop fest right now. So look at the open. So we'll show this for the last few days too, so you guys can understand that this is a lot of volume, right? This is basing, mind you, this is not like a think or swim relative volume, which we talked about this last week, but again, I know there's a lot of newer people on here. This relative volume is showing you, that's this here, is showing you the prior, it's just a simple 60 period moving average relative volume. So it's just saying this is a lot of volume based on the prior 60 period 5-minute bars or 65-minute bars. Well, of course the open is going to be higher volume, right? Because it's basing it off the overnight trade. This chart is telling you something completely different. This is telling you this relative volume chart. This is a Sierra chart, but other trading platforms have it. This is telling you the exact time of day for the last, I have it set for 30 days, if we're above. So you can see at this time period, again, I'm on Pacific, so this is 8:40 Central. We were almost 4 times normal volume in this area. So you can see what is happening here. This is where all this volume came in. Guys, this is just like drawing. I'm going to show you the last 3 days, and it'll be very eye-opening. This is just like drawing an SI indicator zone that we just drew, right, with the SLIs. Like, look at this. You find where this spike came in, see where it ended, came all the way up to here. Let's see. Actually, came all the way up to here. So this is basically one big zone. So we're still inside this. Or this thing is in trouble. If this gets below here, then we're going to have a collapse today, because you got to remember, these are traders placing bets. The guys were buying it like crazy, right? And we saw that sell ice. That's part of this, right? This whole area, and again, now we're turning into range like we were talking about a little bit ago. This whole area is hugely important. If we break, whatever way we break out of this area, you're going to get your move. Now let's look at the last 3 days. Right? Let's go back. There you go. Here's this one. This was Monday, I think, 314. Same thing. Again, this is out of nowhere. This has been happening every day, and this does not happen every day like this for this, for this time period. Again, the exact time period, this much of an increase in volume. This was like almost 6 times, right? So you had this whole area. Here's your zone, right? Actually, from here, what was that? Up to about here, right? Try to break out. What does this look like? What do we talk about? Failed breakouts, like a balance area, right? These are traders placing bets. Guess what? Longs were really happy. Longs weren't so happy. Longs have to puke. You get the huge move, right? This was a 50-point move into the close. That's these guys, whoever was long, saying, oh crap, yeah, we got to get out. Okay? That was Monday. Let's look at Tuesday. Exact opposite. As far as the market movement, same stuff. There you go. What do you see here? This one's even more condensed. Look at this volume. 6 times normal volume for like an hour plus. So from basically the open, yeah, it was a full hour of huge volume. Right there. There's your zone, just like an SA indicator zone. Hey, look at this. Hey, look, move away. And this was over an hourly ATR. You can use hourly for the, when you get these big areas. Retest, failure. Let's watch it. If you know these areas and you know who's caught, if you know the game, you can play it. And then, I don't know why this is moving so slow. There's your puke. Into the close. Same exact thing. Just the other way. Know your volume, huge volume, retest, boom, into the close. Retested it again too. If you know your area and say you got long up here, you're like, well, for a piece of it, you're like, I'm not puking until they can get it back below where all this volume came in. Because remember, just pretend you're the big trader in here, right? Pretend you're shorting. You're putting a bunch of offers in the book, and you just get filled, and then the market moves here. This used to be what I used to do, right? And then I would sit here and hold my breath, and if it came back to the area, I'd be getting out of my shorts, and that's what causes retest failure, right? That's Tuesday. Let's look at yesterday. Guys, this is the most important information in markets, volume, period. I don't care what lines you have on your chart. If you don't understand what's going on in the volume, then you don't understand what's going on in trading. Same thing. This is Fed stuff, but it's still, once we got below here, you still had, this was a 70-point move. These were all these traders that were long, said, oh crap, gotta get out. Right? And then the Fed came in and things changed, but you still had, but then this was still elevated volume. This was ridiculous. I can't remember the last time I saw 10 times normal volume and during regular trading hours in the E-mini S&P. That area led to that. There's your puke. Then you get more traders initiating. Here's your next zone. Gets out of there, gone. So do you see how this all works in tandem? So what I was getting at there is you want it, the 9 o'clock or 10 o'clock to 12 o'clock period. If you start seeing this nonsense, look at the volume. Look how much it died. This is go time for algos. This is go time to take your money. Right? Look at that. We are barely at 60% for the last hour. And that's why we're doing this nonsense. There you go. That's correlated. Right? So this is why when you start to see this, you need to be very careful of initiating trades that you think are going to be breakout trades, because there's no real volume behind it. And then you got these algos that just whipsaw you back and forth. This is what they wait for. You don't think the algos see the same thing? You don't think these algos see this? These algos do not like this. They do not like big volume, because that's what runs them over and throws off their plan. But how often does that big volume come in like that? Not very often. 10, 15% of the time, 20% of the time, maybe. The other 80% is this. And they sense it, they turn on their algos, and then they start to take your money back and forth, where you think, oh, I'm gonna get short, it's going, no. Oh, I'm gonna get long, no. There's your day, lost all your money, done. If you can understand this stuff, you are well above the crowd and well on your way. All right, any questions on that?
Yeah, we've got a bunch of questions. I'm feeling a
Trade
little
is
bit
horrendous, by the way.
guilty actually.
I
I've been
can't even get a
neglecting
retest
this.
of this NASDAQ zone. Pardon me, I'm sorry.
Oh, sorry. Yeah, no, we've got a bunch of questions from the chat when you're ready.
Yeah, fire away. I'm not missing anything.
So
Except watching paint dry.
yeah, Muck Loco, he says, can you explain your ATR settings and how you use it?
So ATR, most everything I use is default, right? And I use Thinkorswim. So I explain this all the time. You know, you want to cut cost in trading as much as you can. And take, again, I went from millionaire to zeroaire. That's a word, right? And I had to start cutting costs. Like back when I was printing money, I was paying like $800 a month for CQG charting, $1,200 a month for TT for the dome, depth of market, all this other crap. It's like nowadays you don't have to pay. You can like Thinkorswim. You put money in your account, you can pull it right back out, and you have access to these charts, right? The same, and then the same with like Sierra Chart to watch that market profile stuff. That's $35 a month, right? That stuff you can find deals on and cut your costs. Where you don't want to be cutting corners is stuff like Bookmap. I see people complaining like, oh, I got the Bookmap and that subscription, and then I got to pay for the SI indicator another $137 a month. It's like, dude, like that information is worth probably $130,000 a month especially if you're a bigger trader. It's like, what are you talking about? It's like there's some things you have to pay up for, other things that you should try to cut costs. One thing you should not be trying to cut costs is Bookmap, the SI indicator. I also suggest you get the Global Plus because you can see the sweeps, but again, that's up to you. I'm just giving you my opinion. I have no vested interest in that. I'm just telling you that is worth paying for, and the Ludwig levels. Cut costs, the other places. But again, before I went on the rant, what I was getting to is you can get this information, and I use the basic stuff, right? It's all, I don't change anything. I don't like changing stuff, right? Like with market profile, you got these guys that cut off these areas, and well, we can look at that in a little bit, but I just keep it the way it is. I don't want my interpretation of that stuff. I want it what the masses are seeing. So anyway, this is just the basic Thinkorswim ATR, right? So all this is Wilder's sub 14 period. This is default. I didn't do anything with the period. I didn't do anything with the type of ATR. You can look into it. You might find a better one. I'm all ears. You know, I don't think I know it all. I never will. And you never should think you know it all in trading. If you say, hey Scott, I did this exponential moving average and this looks a lot better. And again, I don't even really. I'm sorry, ATR. Wait, did I just show you moving average or ATR? Hold on. ATR. Sorry. So you could say, hey, I like exponential moving average or ATR for this reason. I'll listen. That's fine. But I use the basic stuff. So it's Wilder's 14 period. Sorry, I'm starting to rant a little too much now. And what else would you like to know about that? I mean, it's basically, guys say, well, why don't you use the hourly ATR? Well, because I'm a day trader and I'm looking for, I want bigger moves, but that is what, again, from trial and error, that is what I deem the best way to use to judge the areas, the volume areas, whether they're, validated or not validated. You can use hourly. Hourly is 20. If you want to use 30 points, I mean, go ahead. You got to be risking 30 plus points on your trade, and you better be hoping. If you're risking 30, you better be hoping you're going to get. Even though on this trade I'm risking 25, you better be thinking you're going to get 50, 75, 100 points, right? So hopefully that answered that. But it's just the default on the on Thinkorswim. Next question, Sam.
Yeah, I've got Muckloco says thank you, and he loves the rants, by the way, very informative. Andrew has got a message for you. Sam, tell Scott I'm looking for NQ to fill yesterday's incomplete TPO gap between 13,780 and 13,743. Okay. Thank you for that.
That's great, and that's your thesis. That's your opinion on the market, and that's what you want, right? You want to come up with some bigger picture idea, right?
Yep.
But all right, so let's look at that. Again, I don't have volume profile. I use market profile for this because I look at enough volume stuff. So I don't have the gaps here, but that's great. be looking for that though. I'd be looking for that if I see a bearish volume event, which this is about to be. Please come and retest this and fail. Then that's a bearish volume event. Then I would be looking for something like that, right? You see what I'm saying? Is you come like I just said in ES. I'm looking for a breakout. We already had the breakout. What I'm looking for, kind of like what you're saying about your volume profile stuff, I'm looking for this to break out after, especially this buying tail, and get to this high volume. I'm looking for that, right? But I'm looking for that. I need to see a real-time volume event to have that, to validate that. See what I'm saying? And I did get long, but my point is, it's fine that you think something should fill, but you want to see something in the real-time volume that is going to give you the engine or the energy to go down and fill it. And this would be it. If this could, and again, you could be short. This is what I'm saying, right? So you come up with your thesis. I'm looking for that area to fill. The minute you see this, you get, okay, that's go time. That's enough. As soon as it gets below here, I'm getting in. Fine. That's absolutely fine. I wait for retest failure in this situation, but this is a volume event and we are below here. That's why it should fill, right? Not just because you think it should fill. You see the difference? So, but absolutely, you want to have a bigger, because when you start to come up with scenarios, and like I was saying in the beginning of the webinar, and they don't happen, well, that's really good information for the other way, right? Another reason why you could have said, I think we're going to fill here is, like I said earlier, we retested this prior composite and we couldn't get into it, and you got your volume event, right? So this could be an instance where you say, I know that we were above the yellow lug, but you could say, hey, we didn't get in there and we got a volume event, we got below the volume event. Okay, I'm getting short aggressively. I have no problem with that. Right, I'm just waiting for retest failure because that happens literally 80 to 90% of the time, especially in NASDAQ. And it's trying to now. Next question.
Right, yeah, I mean, a lot of the time it's about what doesn't happen, not just what does happen, I guess.
Right, that's sometimes even better information.
Yeah.
Because if you understand markets and you're like, that, wow, that's wrong. I didn't expect that. Well, that means the other way is probably going to be an incredible trade.
John's got a question. It might be a Bruce question, but I trade crypto. How much different is the global plus sweep indicator than the iceberg indicator, as there's no MBO data for crypto?
Right, iceberg. You're not going to get iceberg data because that's just the CME enhanced data. But they definitely have the sweeps. I haven't traded crypto. I traded crypto like 3 years ago. I've been watching. I was watching it on my other, but I haven't watched it lately. But I'm sure it's the same stuff. But you have to figure out what the thresholds are, right? So, meaning a sweep of 100 isn't the same as a sweep as 1,000. I don't know what's a lot, what's a little in there, right? And you have to be careful in these markets too, because for some reason the sweeps are way more than the volume stuffs, right? So normally you would say, well, Scott, your iceberg, your setup for icebergs or your thresholds are 700. Wouldn't this be a zone? Wouldn't you draw a zone if you see 1,500 sweeps? So you can see how the sellers see the red cell bubbles. Let me get a different color here. See the red cell bubbles? The white is just passive buyers that were just sitting in the order book that just got run over or swept, right? So my point is, this was 1,500. So that's double what I usually trade on for my thresholds for icebergs. But for some reason, I mean, this is definitely, you could draw a zone on this. I wouldn't yell at you for that. But just be careful. I haven't done enough research on these sweeps to qualify them as zones, is what I'm saying. It's definitely not the same as icebergs. A 700 sweep in ES is nothing, right? You see 1,500, 2,000, 3,000 all the time. So, but 1,500 is significant where if you wanted to draw a zone off of this, I wouldn't argue with you. I would say if it was 800 or 700, I would not draw it. And you can see that area kind of help. So I was kind of a sissy there and I puked out. I had too many on and I puked out 2 of them. I should have just held it, but
Soybean ice iceberg buys ES 158 contract.
I should have never had 4 on in the first place. So once again, my mistake, you guys should learn from it, right? And I took a $1,300 loss for no reason. So this is back. I'm not the high tick anymore. That alone is going to make my day where I won't complain for the rest of the day. This is really, really annoying. I don't know if I said that before. All right, so now what's happening is if we can ever get up to the zone, then I can at least potentially short this, and then I'll have like a built-in hedge for that ES trade, but we'll see. Let's take a quick look at soybeans here. Never got filled to the upside. We're definitely now an ATR below there, and you can see big ice is coming in here. So that is canceled, right? Because we got a full hourly ATR below there, so that disqualifies this zone as a potential bullish zone. But now what do you see here? 200 icebergs. So this is a new volume event, so we trade off of that. Let me get rid of this.
Soybean ice iceberg buys ES 153 contracts.
There's another 150. So now you're looking at over close to 400 icebergs in this zone. Look at this big selling. So this is what, if you guys don't understand icebergs, the newer people on here, these are the market sellers. Someone is selling this like crazy, and they're running into hidden orders in the order book. So these orders don't show in the order book until they're triggered, right? And then, so someone was like, yeah, I only see 6 lots and 14 lots. I'm going to hammer this thing and push it down 10 cents. No, you're not. You're going to run into 400 icebergs and be like, oh crap, no, that wasn't right. So that's what icebergs are. The whole idea behind icebergs is because the big money has to hide, they have to hide their orders, because if they just throw, like, look at this order book. You think these algos, if you throw a 400 lot bid in, these algos will just sprint away from it because they want the big order to chase it, right? So that's why they have to hide their orders, and that's what that is, right? But you could see this information. Most
NQ stock by NQ.
Here we go.
316 contracts.
Now this is a new volume setup though. So let's see. All right, that's a large stop run. So what I'm going to probably do here is I'm probably going to short this aggressively. I know we're above the yellow lug, but with that market profile and I'm long ES, I'll probably short this aggressively if this fails out of here. If this holds, moves higher, then I'm going to long. Let's see, that's this, I believe. Did I get that whole thing in there? Yes. All right, so let's check our ATR. You see it right there in the middle, 37.93. So that's 30.34, so I round up, so 30.5 points below here, I will short this market. Pretty sure I can put on 2, we'll check that too. So the zone is about 14 points wide. So I go to the bottom of the zone. So 30 points below here is 92.50, and then so I said 30.5, so 92 even is where I will go short this market. Hold on 1 second. So again, normally above the yellow lug, which we'll look at here in a second, I will wait just like I was waiting forever for this to retest this zone, and we still didn't get there. But now I'm going to get short aggressively. I'm not going to wait for ATR retest because we failed at that market profile, and I'm long ES as well, and it's kind of a decent hedge for that. So let's hurry up and draw this, and then I'll come back to this. How's this big seller, how they're feeling right now with a mouthful of buy ice? Probably doesn't feel so good. All right, so that's that. We will trade off of that. I will come back to that in a second. Let's make sure that we're about due for a headline, aren't we? Let's see. So I said the zone was 14 points, and I'm risking 30, so that's 30.5, that's 61 points of risk, meaning if I get filled, I'm getting filled 30.5 points below the zone, and then I have to risk 30.5 points above it. So that's 61 points, and then this zone was another 14. So that's 75 points of risk that I have to take on this trade. Make sure that I have the right size on. This is NASDAQ right here, this column. I think I only have one on, yeah, so one only. You may say, wow, one lot, but guys, with the volatility, that's, this thing could easily move 300 points, easily. Let's change that to one. All right, so that's locked and loaded. Oh, and the other thing too, it's like you could be saying, well, he's risking 75 points. What? I don't want to risk.
Nice iceberg buys ES 151.
I don't want to risk 75 points. I want to risk 15 points. I want to risk 10 points. Guys, that's why traders fail, because you're trading off your P&L and what you want to lose or make. The market doesn't care what you want to lose or make. I tell you every week. It cares about volume, important areas. So you've got to place your orders. There's another 200 by ICE. You've got to place your orders in areas that aren't just random in the middle of nowhere. You have to place them outside of the volume areas, right? And that's how I trade them, and I'm willing to risk 75 points because I know, because of the volume is the event, right? So there's enough volume in this zone and this zone that whatever way this motor's out of here, you're gonna get a move that's probably going to be well more than 75 points. That's the whole thinking behind it, right? So you scalpers out there, are you saying I'll get short, but I don't want to risk, I'm risking 10 points. Well, guess what? Market could come back in here and screw around in this thing forever. Out of the zone is where you're going to be protected. Doesn't mean it's not going to get out of the zone, but that you want to let it make it show it can get out of this area, right? If you're trading like that, I'm just telling you, you're not going to make it. You have to, if you're trading off of your P&L, one, like I've told you guys many times, when I finally took off is when I finally turned my P&L off and just traded, right? And then at the end of the day, I'd look and I'd be like, what the heck? I mean, your first couple of trades, you kind of know where you're at, but if you just keep it off and you just trade your zones and trade your system, you will be shocked. You'll bring it up and you'll be like, wow, I didn't know, I thought I was up like $1,000, I'm up 12. I can't tell you how many times it happened. And I know what you're saying on the downside, well, how do we know? And that's what we talked about last week. You have to have a broker that will stop you at a certain amount for the day. If your broker does not do that, get another broker. Why all brokers don't do that? I don't know, because the broker needs you to stay in business, right? They need your money. They need your commission. If you're not trading and you blow out your account, they're not getting any commission from you. So if your broker doesn't give you that option, you need to find another broker. Plain and simple, right? So again, it should be call your broker. And I know, probably more than half the guys on here are like, oh, I don't need that. I could stop myself out. Well, you guys heard the story last week. When you are in the heat of the moment, especially when you get bigger and bigger and bigger and you're getting smoked, most traders are extremely competitive guys and girls, right? That's the nature of the business. You are not thinking clearly. It's called going on tilt. You will do stupid stuff. Trust me. Okay, you heard my story last week about dropping 800 grand 2 different times within a month, because not only did I not stop myself out, which was even more ridiculous, as my firm didn't stop me out, because I had shown the propensity so many times to come back. So then they would listen to me, and I wasn't in the right mind, right? So they would call me. I'd be dead. My drop dead was 100 grand. They'd call me on the phone. I'm pissed off, about to break a screen. Probably already broke a screen at that point. I was kind of a hothead back then, way more than I am now. They call me, hey, what's going on? So when you first start, they just shut you off. But when you make a name for yourself, you basically call the shots. Or even though that defeats the purpose of having a risk manager, right? And they should have known that, especially after it happened the first time. So they would call me, hey, you okay? Yeah, just give me another 100 grand. I'm pissed, I'm short, and just give me another 100 grand. They give me another 100 grand. Then I'll lose that, and then I would lose that. And other times, I wouldn't even tell them. They just let me go. And the 2 different times, instead of stopping at 100 grand when I wasn't thinking clearly because I was so pissed off, I dropped $800,000. 1 month later, to the day, the same exact thing happened. So if I could have just stopped myself, which I couldn't, this is what I'm trying to explain to you guys. You say you can when you're calm. Many times when you're pissed, you're not going to stop yourself, and that's when you kill your account. So if they just would have stopped me, I couldn't stop myself, obviously. If they could have, that's what they were in place for. I would have another $1.4 million in my bank account, right? I should have only lost 200 grand instead of 1.6 million. So if that story doesn't hit home, then again, you guys are not learning anything from these webinars. So find a broker that you have a preset amount. So if your account's 10 grand you shouldn't be losing more than $600-700 in a day. It does. I'm just telling you, you may not like that, but if you want to survive, that's what it needs to be. If you've got a $20,000 account, you shouldn't be losing more than like $1,200 in a day. So you call your broker. Hey, could you put in place if my P&L hits down 1,200, could you please shut me off? If they say we don't do that, you say thanks. Okay, I'll be moving my money then, because I'm telling you guys, if it is that is one of the most important things you can do besides your risk control with your spread calculator. Right? Once again, please learn from my mistakes. Unless you want to drop 1.6 million bucks until you figure it out, then be my guest. But I'm trying to. That's what these webinars are for, so you don't have to go through that kind of pain. And trust me, to this day, I beat myself up about it. And that was, let's see, it was 18 years ago. So,
Yeah. No,
just please learn from my mistakes. Is what I'm telling you.
yeah, that's a great
All
lesson.
right. Go ahead, Sam. You were asking something?
No, just on the tilt. Yeah, I can relate to that. I used to play a lot of poker as well. It's exactly the same online poker. You get tilt. You also get something called win tilt. It can work both ways. When you're overconfident, when you're on a rush, and you kind of deviate from your plan. So yeah,
Right.
it's really solid. You got to. I mean, with poker, I just used to identify it and then close my windows down, walk away, because it's just and you look
Right.
back.
But that's the problem, right?
Yeah, no, it's
Go
a
ahead, I'm
challenge.
sorry.
It's a challenge. No, yeah, it's
Right. And many times you cannot do that for yourself. And I know it sounds like childish, like, well, what kind of discipline do you have that you can't just turn off? Trust me, it's a different story. Especially the more competitive you are, the harder it is just to turn off the screen and say, "Oh well, golly gee willikers, you guys beat me today. Good job." Right? You're like, "F that. I'm getting this money back."
Yep.
Right? And that's where and then you get killed. Then you lose that, and then it's like, "Oh screw it. I have a $10,000. I already lost $5,000. I might as well just let it ride." Screw it. And then because you're so mad, right? And then you drop $10,000, and then you wake up the next morning and you say, "What the hell was I thinking?"
yeah.
Guys, I'm telling you, this is exactly how it's going to go for 99% of you. So circumvent that. I don't care how much you think you're self-disciplined that you can turn it off. Have your broker stop you. Stop for the day. You drop your money. You go take a break. You can, it turns back on and the Globex open. You're refreshed. You're seeing things clearly. You live to fight another day. But that's the main thing is if you can identify it, that's great. But that takes a lot of practice. Trust me.
Yeah.
Trust me.
It's well, I think the reason it's so difficult is like going against our natural instincts, and it's kind of like the fight or flight. You just want to get it back, get revenge, get.
Exactly.
It just doesn't work. It's like trading poker. Maybe in like a football match or something, it's good to get fired up. It's good to fight back a little bit or whatever, but not in trading.
No. Yeah, you're exactly right. And I mean, and that's the problem, right? It's like you want to be competitive. You need to be competitive to compete in this stuff. But it's also a detriment. So what do they always say? Like your greatest strength is your greatest weakness, right? That's for me, 100%. My greatest strength is my competitiveness. Like I was telling you guys earlier, when I started that trading firm, I saw some of the dimwits that were making, $5,000 a day. And my exact words were, if these guys can do it, I know I can do it, right? That's my competitive nature. But my competitive nature also cost me millions of dollars because I wouldn't quit because of my competitive nature. So your biggest asset and many times is your biggest weakness. If you can understand that, then you can circumvent a lot of pain. What did I do here? Hold on a second. Sound is not right. So you can see you had this. That was this stuff here.
Further spending pressure during war imply governments may face difficult fiscal choices to keep debt to GDP ratios declining.
What am I doing here?
I think from past news, Belarus is still allowed servicing foreign debt. All right.
Was I counting this before? That was only 140. Yeah. So I'm making this one big zone because the bias came in here. Yeah, that's right. And then it came in again, if you can see down here. So this is now a 9-point zone. And don't make this mistake. I did this exact thing yesterday and I cost myself a monster trade. So it was like, because you don't usually see 9-point zones in beans, right? So it's usually like 3-4 points or cents. It opened up, the zone was like this, and then another volume event came in, and I'm like, and I do trade off the most recent volume event, but it was right in the middle of the bigger zone, and we broke down, and I was waiting for a retest of the smaller volume event when there was the bigger one, and I had deleted that zone because it was too big, because I didn't like it. That's what I'm telling you guys, doesn't matter what you like or don't like. So it came back, it retested the big zone and then sold off like 40 cents. And I was waiting for a retest of this, and I sat here and watched it do this because I decided I didn't want to trade off a 9-point zone. So I'm not doing that today is what I'm saying. I'm incorporating this and this and this all in this. So let's just see where we're at. I think we're still above the yellow lug. Again, there's my college basketball stuff. Very, very important. I have Kentucky winning it all for inquiring minds. One of my brackets is Kentucky Auburn in the final. All right, so we're still above the yellow lug. Why is this not? It's going. There we go. So we're still above the yellow lug. So to go short, because we're above the yellow lug, I need to see ATR, which is, I think it's like 3. I'll check here in a second. I need to see full ATR retest failure. To go long, I'll go 80% aggressively. So why didn't you guys tell me this trade was going to come back so I didn't get out of 2 of those down there? I wish someone could have told me that. Because, so this is exactly what I'm talking about, right? It's like, the reason I got out of 2 is because I made a mistake and had too many on, right? I didn't get out of my position because, yeah, did this feel good when I got long to the tick, and it's literally within 30 seconds we sold off 15 points. Look what it respected, right? So that's what I'm saying. If you get in here, say I'm sure some people did this that were watching me. I'm sure people got long and they're like, well, I'm not risking all the way down there. I'm getting out. I only risk when I put on a trade. I only risk 6 ES points. So I'll get out right here, right? And then it swipes down. You get stopped out. It didn't violate the important volume event, and back up, right? So you just got algoed if you got stopped out in here. I did not because I put my stop. I actually went below this zone too.
150 contracts.
But that's why you don't place your stops according to your P&L. You place them based on the volume event or whatever else you're looking at. It doesn't have to be the volume every time. It could be a lugwood level. It could be, market profile. But it can't be based on your P&L because the market doesn't care about your P&L. All right, let's see what's going on in NASDAQ real quick. So this short idea is out the window, I think. No, not necessarily. Let's say so the short idea, it will be disqualified if we get an ATR above that yellow zone. ATR is 35.76, so 36 points above this yellow zone, and that's no longer valid. But what did happen here? See, this is the issue. This is 150. Yeah, I'll draw this. I have a lot of zones here, but this is 150. So again, today that 150 is a lot, right? We've only seen it a couple times, if that. We saw a big stop run, but iceberg wise, we haven't seen. We saw 200, and here's 100 and 150. So let's draw this. Make sure you get all the prices. Then incorporated that. That's that. I'm gonna make this another color. So I'm gonna do the same thing here. I'll get in short aggressively. I know we're above the yellow lug, but like the same reason that I was using before, market profile, and I'm long the ES, so I will do an aggressive short here. So ATR again is 36, 8.8, so 29 points below here. Hopefully we're not already there. All right, so that bottom of this zone is 44, right? So 1475, so 1575 is 29 points. That's where I'll short it, and that's good. That's right below that zone. I think I might be able to put on 2 now too, 1575. So the zone was only about 8 points wide. Then your stop is, or my entry is 29 points, so it's 29 and 29 because I'd be risking 29 points above, so that's 58 and 8. That is now 66, so I think that's a 2 lot. Real close, 65, we'll do 2. I already have 2 in there. Hold on 1 second. So now there's 2 different volume events that this thing, if this was bullish, if this is bullish, this needs to hold, right? So you had this buy stop, right? That should hold. And you had buy ice, that should hold. If these both fail, then this thing's going down. And now you have some invested traders in this area, right? Buy stops, there were some sellers there, obviously, that had to absorb the buy stops, and then you had buy ice come in, more sellers that ran into buy ice. So this area, this whole area is, and we saw the double whammy from earlier, the move out of here is probably going to be 100, 200, 300 points. Cancel that. Any other questions, Sam, on setting this up?
Yep, we've got a few more. Yeah, sorry guys in chat. I'm not doing a very good job of keeping up with you all. But Alex on YouTube, where'd you get the relative volume indicator from?
Where did I get what?
Relative volume indicator. I'm not sure.
That's on Thinkorswim. I'll show you that here in a second. Let me. I got filled on this again to the exact tick. Oh my goodness gracious! All right, so this is what did I say it was 29. So it's 29 points above this zone, so that puts me at 82.50, 81.50. That's where I'll step out of this. Much as, I mean, I don't usually trade like as far as, oh, I'm going to put on a short because I'm long ES, but so if this thing dies, trust me guys, by the end of the day, this stuff's all going to get filled. I'm 95% sure, right? So if this does crash, I'm going to lose on this, but then I'll have my NASDAQ position on. I don't usually do that. I'm not taking the short because of that, but I would normally not, I wouldn't be aggressive out of the zone because we're above the yellow lug is what I'm saying. Right, hopefully that makes sense. All right, hey, it didn't get filled to the tick, so that's just a positive in itself right there. All right, so let's check out some important areas where I may scale out of some of these in Q. So yellow lugs down at 13,828. I'll definitely look down there because you also want to look for confluence and stuff, meaning you can see it. So this is VWAP, 1 standard deviation. They call that DVA, right? Daily value area. And then these lines are standard deviations of VWAP. So this is -1 standard deviation, -1.5, -2 is like below this, it's in the yellow lug, and then you can see that's the target. So this area down here, I will definitely look to cover. I might cover both because of that, because there's so much confluence down here, right? So you have, again, negative, extreme standard deviation. So when you get extreme standard deviation, you have these algos that kick in and revert to the mean. So we got that, we have yellow lug, we have baby lug. I'll probably get out of both there if we get a swipe down into there, right? Or if I get a bullish setup and it moves an 80% of an ATR out of there, then I'm out of the trade. I don't ignore setups going the other way, right? And then potentially I would go long if it went full ATR. Actually, I would go long 80% because we're above the yellow lug. Hopefully that's not confusing. All right, so the relative volume on here is just, again, it's on Sierra chart. I don't claim to be a expert at all this stuff. Sierra chart. Remind you, it's very cheap. It is. I'm not kidding you. You have to do everything. You have to build your own charts, your own bar charts. I mean, there's obviously YouTube and Google, and you can figure it out. But it is, yeah, you save money, but it comes with a cost. And then if you try to, email support, they act like you're the dumbest guy on the planet. So just be aware of that. But you can get this for $35. So this is showing you, so when it's red, it's under 50% or lower. If it's yellow, it's showing me it's 200% or more. It's based on 30 days. Again, I don't know what that is, but these are my settings for that. Let's see if there's any subgraphs or anything. Yeah, there we go. Again, this was set up for me like literally 3 years ago, and I haven't changed anything, so I don't claim to be an expert. Just Google Sierra chart relative volume, and that'll tell you. I don't have any alerts or anything. That's it. Other platforms have this. You just got to kind of dig to make sure it's not a simple relative volume. Like I said, it's not just showing you the prior 60, 100 periods, that it's actually showing you the exact time of day. That's what's important. And you can see this is still pathetic. This NASDAQ trade's probably going to snap right back in my face. Like, look at this volume. It's horrific. This is why I don't trade, or I shouldn't be trading at this time of day. I guarantee I pull this NASDAQ trade up and it's back in my face. Ready? Here we go. No, not yet. It's coming. Just hoping I get another signal so I can at least trail my stop, which I probably will, right? So if this comes down and you get like a stop run, then you can trail your stop 80% of an ATR above that stop run. Right? But I don't trail my stop otherwise. I don't trail my stop because I like my P&L. This is another problem. What do you think the algos? You don't think the algos know that? They don't. They know that most traders are. Whoever is short, they're like, oh yeah, I got this winner. I want to book this, man. That's my rent. I'm gonna put my stop right there, and then it does that, and then that, and then it goes. Right. That's why, especially at this time period, you gotta be very, very careful. I mean, you shouldn't ever be trailing your stop based on your P&L. But I'm just saying, this is not going to surprise me one bit to watch that happen, and then have it do this, and then maybe finally die. All right, any other questions? We're almost 2 hours. Wow, time flies when you're having fun, because this has been such a great trading day. Not.
Yeah, no, I was going to say.
Give me another question.
Let me know if you've had enough. Just give me the nod. But yeah, we've got more questions if you want them.
Let's just do a couple more, and then I'm gonna hop off. I got a date with the golf course this afternoon and NCAA basketball. It's good to get away from the screens too, guys. Like, especially in these markets, they've been so crazy. Like, take a day where you just say, okay, I'm not even thinking about the markets for half of a day or something, especially on the weekends. But
yep. So Ethan on YouTube, I'm not sure what he means. Maybe you do. How do you get those auto demand zones on the chart on the right?
how did I get what?
How do you get those auto demand zones?
What's an auto demand zone?
Yeah, he might be talking about the LUDs. I'm not sure.
The Ludwig levels?
He might be. Ethan, maybe you can confirm that on YouTube.
Yeah, so guys, as well, go to, if you want to try these out, she's got a free 3-day trial. Go to her website, ludwiglevels.com. I think it's ludwiglevels.com. And then put in sign up for the 3-day trial. It's free, and then say you saw it on the Bookmap webinar. And if you do join, she has special options for Bookmap peeps and my trade room as well.
And can you show your SI settings? The stops and icebergs. That's from John in the Discord channel.
For what product? Again, that's all part of the course or my room, but I'll show a product or two. What do you want to know? Which product? Hey, look at this. There's a shocking development. I can't believe this trade's coming back. So I'm talking, guys. When the volume is like this, you're better off not even trading, because there's not enough force to push this thing down, and then the algos just turn around and rip it right back in your face.
Yep.
What product?
ES.
ES, I have 700 for icebergs, 500 for stops. And you want to make sure, just quickly, we go through this all the time, but 500 for stops, 700, 500 you want in 10 seconds. 700 you want in 60 seconds because, stops you want to see, obviously it's a quick event, right? And then icebergs, you want to give it a little chance to develop, so I have it at 60 seconds, and that's what's going to show on the subchart. Just make sure, I'm sorry, this is for these early alerts. So when you do this, make sure this stuff above here aligns with the alerts, right? So icebergs, 1 minute, I have it at reset mode. Stops, 10 seconds, reset mode. And then make sure this stuff down here is the same, or else you're going to be getting alerts that aren't the same thing you're seeing on the subchart. Okay? So here's your alerts. 500, 10 seconds, 760 seconds. I have text and voice. For text, which you want to have up to because you may miss something, especially when you start hearing all these setups all the time. You can kind of like, wait, what was that? You just come to File, Alerts, and then that's over here, and then you can see exactly what fired off. And the time and everything else, so that's very helpful. All right, one more question and I'm gonna hop off.
I think we're pretty much caught up now. I mean, we've got questions like what's the difference between the yellow and orange lines. I think it's just, that's kind of talking about the liquidity on the heat map. Maybe you can just talk quickly about the liquidity and how that works for this this guy, but yeah, that's about it.
Well, the lines that I use different colors for whatever the setup is. So I try to use blue for buy ice, I try to use yellow or white for the stop runs, I use black for sell ice. That just helps me distinguish what it is, and that's good for webinars to see, you guys can see what's what. These are, all this is a representation of the order book. It's just an easier way to understand the order book, right? So you can see relatively 600 and 900 are a lot more than 72, 48. So this is the big money, big size waiting here, and this isn't even that big a size, but relatively it's huge size, right? That's why it's glowing. So they said the big money that, trust me, eventually they're going to get it down here. So this is when I put on this trade originally. I thought we could do something like this, and then we eventually, by the day, we come down and fill it. So I wasn't afraid to get long that, but as the day wears on, trust me, it's a very, very, very good chance we're coming down and filling all this because they'll make it come down there to fill it. That's the whole point. If you know the game, then you can play it, right? Like we talked about. All right, guys. Not a lot going on today. A lot of decent lessons, I think. But one of the main ones is when you see that relative volume dying down, you would best serve yourself to get up and go do something until it picks back up around 12:30, 1 o'clock Central. If that, looking at that P&L, I wish I could show you my P&L from back in when I was scalping. It was millions. It wasn't 70 grand. It was millions and millions of dollars. So I'm telling you, back then the algos weren't even that prevalent. It was just a terrible time to trade. It's when guys would start manipulating the market because the guys from New York, the big money goes to lunch break and stuff like that. There's not a lot of participation, right? There's exceptions, right? If you're sitting here and you see that, that main chart that you should have up, and you say, okay, I'm not trading at this time of day, unless I see this, at least 2-3 times normal volume. Well, yeah, you can stick around and trade because that's out of the ordinary. But this is, mind you, this is showing me. This is showing me. I already know it's bad trade at this time of day. This is showing me even. It's terrible trade at this time of day, and this is showing me right now for this time of day, we're 50% of what we normally are at this time of day. That's how bad this is. That's why you can expect Whipsaw City until it starts to. So you can understand your areas, right? So like I told you, whatever way we break out of these areas, again, this is a big area, but whatever way we break out, that's where you're going to see your monster move. Because all these traders, someone's got to puke them. All right, guys. Next Thursday I will not be here. I'm going to Las Vegas to celebrate my 50th birthday. That was March 1st, so I'm going there. So no webinar next Thursday, but trade room. I do this every day, twice a day. Go over trades, go over the markets. So you want to see this on a daily basis. That's where I'm at.
Thank you, Scott. Enjoy Vegas next week. I'm jealous. Hopefully this was valuable for everybody. Yeah, thank you.
Thanks, Sam. I appreciate it. Thanks, guys. I hope you learned something. Please listen to my life lessons, and you don't need to go through 20 years of torment. All right, I'll see you guys in 2 weeks. Appreciate it.
Okay, bye-bye. Thank you.